crude oil prices have surged over 50% since the beginning of the Middle East conflict on widening supply disruption concerns across the region, raising the price above $100 per barrel on Monday. Hello everyone, this is Razan Hilal, market analyst with Forex.com, live from Dubai. Today is March 9th, 2026. So in terms of WTI and US oil, we had prices surging following today's open all the way towards 2022 peaks near the $119 per barrel. Now, we did manage to also open another gap above the close of Friday, which was near also a critical resistance near the $91 per barrel, which aligned with highs last seen in September 2023, lining with the highs of that 2.5-year downtrending channel that we were analyzing across that period. Now, given that bullish breakout and also aligning with highs last seen in 2022, which was during the Russia-Ukraine invasion, and market expectations for supply disruption risks during that phase, which were not as serious or as concerning as that we're seeing in 2026, might have a more stable setup towards the upside, especially should further oil disruptions and should the closure of the Strait of Hormuz also extend across that horizon along with the Middle East conflict. And also should we have a clean close above the 115 mark, the next levels we can be eyeing are the 130 and the 150 levels respectively. And these levels can be derived using Fibonacci extension tool placed between the lows of 2020, the highs of 2022, and the lows of 2026, where we can see the 115 mark aligned with the golden 618. And the clean close above the golden 618 extends expectations towards the 786, which is near the 130 mark, and the 100%, which is near the 150 to the 152 price zone. Now, from the downside, we might be expecting potential consolidation in line with that steep surge, which is, if we take it between the lows of March 2nd and the highs of today, it's over a 70% surge in crude oil prices. A clean close below the 97 mark might expose the 91 once again, which was Friday's close. And a close below that can possibly expose the 85 level for another short-term support. If not, then we might extend further towards the previous high over here of June 2025, which was the 75 mark for either a short-term dip buying level or exposing prices to further bearish buys on the horizon once again. Now, in terms of Brent or UK oil, we have a very similar setup to that of US oil, with price action pulling back from highs last seen in 2022 near the $118 per barrel. And as long as we're holding below this level, we have increasing consolidation risks on the horizon. And if price action does manage to close potentially below the highs of 2023, that is below the 98 mark and the 92 mark respectively, then we might have potential further consolidation or a corrective drawdown risks all the way down towards the 85 zone for potential short-term support. If not, then we might be revisiting back the opening gap, which is near the 76 zone, or the neckline of that double bottom pattern formation, which managed to reach a full pattern target today, which extended on the charts between April 2025 and November 2025. Now, if we do manage to close above the 118 mark, we can be expecting gains to extend towards the 132 to the 133 zone, and further towards the 152 to the 153 level. And these levels are defined using Fibonacci extension tool placed on the chart between the lows of 2020, the highs of 2022, and the lows of 2026, where we can see that the 50% aligns with the 118 mark. We had the latest pullback, and the clean close above that is expected to extend gains towards the golden 618 near the 132.70 and further towards the 786 near the 152 to the 153 zone, in line with the levels identified on the US oil. Now, we can also see that momentum is up near 2022 highs, which is quite stretched and leaving crude oil prices vulnerable to high volatility swings should we have any expectations change with respect to the crude oil market and the Middle East conflict across the horizon.